Marion, walk us through sort of what kind of cuts the investment bank could see, and like what are the camps that we're seeing evolve in the executive branch on this?
Yeah, so this is a very important week for Credit Suisse. The board of directors is meeting in Singapore to discuss the fate of the investment bank. They announced a couple weeks ago that they are looking to make a decisive decision on how big of an investment bank it really needs. So this has been a long debate, and they've been debating for 2 years now as to what exactly they need to do to resolve this issue. So some of the cuts we could be seeing, are, for example, in rates trading, where they've largely exited. There's a couple, there's still a little bit of a business there, but that could be an area that they cut. They've already announced that the securitized products unit, which is, largely the trading of mortgage loans, is up for, looking for new capital. That could be up for sale. And there are a couple other sort of advisory sort of debt capital markets, lev loans that don't have natural tie-ins with their wealth management business that could be downsized as well and are quite capital intensive. So there's a couple different areas that we're looking at here, and there's not necessarily agreements among the board members as to what exactly should be cut.
And Marion, it does seem to be that the board members are divided, and one of the reasons they are divided is because there's a different assessment going on behind the scenes of just how much of the investment bank you need to cling on to satisfy the demands of wealth management. Tell us about those linkages.
Yeah, exactly. So, the perennial debate with some of these wealth management units is that, you need a good investment bank to serve your billionaire clients who might have businesses, who might need to IPO them or might need other kinds of, debt financing or other kinds of investment banking services. However, not everything you do in investment banking is going to serve that billionaire client. So it's really a debate of where do you draw the line. And so obviously you have a couple people, including Michael Klein, Blythe Masters, who are both well-known investment bankers, who are sort of in the camp of, well, actually, let's not aggressively downsize this. We could still use this. It's still important. And then there are people on the other side who are saying, actually, the investment bank has actually cost us quite a lot, and there aren't really any clear, obvious ties, or they're not as big as we thought that they were, so let's cut it even more drastically. So it's really where we're sitting right now.
So I wonder, Marion, too, once they actually make this decision, how fractious, is that a word, it's going to actually be. So then you have executives on one camp versus another camp. Like, then how do we move forward from here? Like, we're going to see more exodus in terms of talent, et cetera.
Well, I think there's going to be a lot of negotiation among the top executives. They have a bit more time. They've said that their plan is going to be revealed with third quarter earnings, which is end of October for Credit Suisse. But, it's going to have to be a debate for the next couple of months. Of course, the signals to the market and signals to the employees are going to be really important. So they're going to have to start communicating right away as soon as they know which parts they are going to keep to avoid that talent from leaving before they've made the decision.
And Marion, of course, it was the investment bank that was the source and the home for a number of issues that Credit Suisse has faced over recent years. We've seen the exit of one or two CEOs in the past few years for various reasons, but more recently the CEO out and the new CEO, Ulrich Körner, in. This is the priority for him, is it? Deciding the scope and size of the investment bank. He's got a big job on his hands.
Yes, definitely. This is the priority. I mean, among a broader strategic review of the whole bank, but this is the priority. I mean, the investment bank has been the source of massive losses over the last couple of quarters. I mean, there was about $1 billion just for the first half of this year. Obviously, last year we had the collapse of Archegos Capital Management, which cost the bank $5.5 billion. So it's been a heavy, catastrophe actually in this investment bank. So I think they're at the point where shareholders have had enough. The stock is at an all-time low, so a decision needs to be made.
Yeah, and also capital needs to be raised. Marion, I was interested by the note from Deutsche Bank saying that they see Credit Suisse facing a capital gap of at least 4 billion Swiss francs. Wow, that's a lot. And basically saying they have to truly 100% sell its securitized products in order to sort of make some kind of cash here. It's a pretty grim outlook.
It is a grim outlook. I would just remind you that the bank still is within, regulatory minimum requirements on capital. So it's not that they're really in a dire need. It's more in order to actually execute anything that they might decide on, they're going to need funding. And at the same time, they've also announced massive cost cuts. So you're sort of doing a big restructuring, adding cost cuts, the markets are not helping either. So from profit capital generation perspective, that's not helping. So you might want to consider these sort of easy quote unquote carve out. So the securitized products group, for example, was an example of could they just sell that off, free up $3 billion in capital.